Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I will be speaking about USDCAD because we have quite interesting price action and structure. Now, starting here from the monthly time frame, what we can see is that in all this impulse to the downside, there is one candle not related to the move, which is exactly this green candle here. Now, when you have a strong impulse with one candle not related, usually that indicates that at that candle, the market created strong rejections. In fact, if you have a very strong bearish momentum developing and the market creates a green candle at that zone, it means that here there was very strong buying pressure. And usually, if that level then breaks to the downside, it means that that previous support becomes resistance. So that previous buying pressure turns into selling pressure. And in fact, we can see how the market respected that rule, creating multiple rejections at this area, creating in fact a quite strong resistance area. Now, dropping down on the weekly time frame, what do we see? Now here in the weekly, we can see a confirmation of what we have already seen on the monthly time frame. We can see how every single time that the market tested this zone, it got rejected to the downside, and at the moment the market from a weekly perspective has created new structure. In fact, we can see how we are currently testing this area of previous weekly support, which the market broke to the downside with this impulse, and at that point that previous support was turned resistance here. And at the moment we are testing this resistance, and we do expect the market to potentially reject it to the downside. Now in general, if you have an impulse and you want to measure the potential correction, you have to take the Fibonacci from the high to the low of the impulse leg itself. And what we can see is that the market at the moment is testing that zone which is in between the 0.32, 50% and 0.618 of the Fibonacci taken on this weekly impulse, which is a very strong resistance zone that we do expect this market to reject to the downside. So here on the weekly as well, everything seems pretty bearish. Dropping down on the daily, what do we see? Now here on the daily, we can see how we do have support at this zone. Now, clearly the market is respecting this support, and by the way, the last time that we spoke about USDCAD was in fact after the creation of this W formation, in which I made a full breakdown explaining all the reasons for which we expected the market to create a move to the downside to go and complete the pattern at this previous resistance turn support. And we can see in fact how the market has just tested this zone, completing the pattern. And by the way, I will link in the description this previous analysis so you can go and check it out for more free education. Now here on the daily, as we were saying, there is a problem because all this zone here is very strong support, acting as support here, again here, again here, which is clearly the previous daily resistance turn support given by the neckline of the W formation. Now, in a situation like this, where on the monthly and weekly everything seems pretty bearish, however, on the daily you still have bullish structure, this means that directional time frames, which are monthly, weekly, and daily, are not aligning. In this case, obviously, they're not aligning on the bearish side because the daily is still bullish. So in order for all time frames to align, you would need the market to create a break of structure from a daily perspective. Now, if we go and see what we have when it comes to the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the CAD, we can see that lately the net positions on the CAD have been increasing. In fact, we went from having a negative net positioning of minus 4.9k net positions with more shorts than longs from an institutional perspective to now having 12.1k net positions with more longs than shorts. In fact, 37k longs and only 25k shorts. Therefore, the CAD is getting quite strong from an institutional perspective, which indicates that it could be possible that USDCAD manages to break below this support, which would at that point trigger a potential shorting opportunity. Therefore, the way in which we could be approaching this is, as usual, being reactive and not predictive. If the market actually manages to break below this support, at that point, monthly, weekly, daily, and the COT data, so all the directional timeframes, would all be indicating for potential continuation lower. So after a break on the retest of this previous support and resistance, what we could be doing is monitoring price action from an intraday perspective, so 4-hour and lower, which are the best timeframes when it comes to the confirmations, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the downside for the creation of more bearish continuation. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.